the Fidelity probability calculator wasn't correct today. But then again, it can't ever be correct because it's only a percent chance up or down. It just, it was right on the downside today. But I wanted to show you something that should jack you. So today, honestly, was how I expected it to go. If you think about the options, what happened yesterday? If you held options, you made a shit ton of money. Because what happened? We saw gains of upwards of 6,000% from these options, particularly in GameStop. And AMC had a nice options day too. 6,000% on a 27% move in GameStop. That is absurd. So what they're doing, in my opinion, is that today we saw a lot of shorting. I calculated the off-exchange short interest from the FINRA TRF facility, which is the Carteret, that one that takes up most of the market share right alongside the ADF facility from FINRA, the protectors of investors. Anyways, after doing the math, off-exchange volume, out of the total volume off-exchange, 56 of it was shorted for AMC and GME both, like the exact same percent shorted, 56 for each. So heavily shorted today. The reasoning, in my opinion, is because the options, they went tits up yesterday. The game is, they're likely selling at the top. Today we saw options this week, as far as weeklies, lost 94% of the value that they gained yesterday today. So, but that being said, they're still highly inflated as far as from a longer time frame standpoint. So if you look 2 weeks out, you can't get a call cheaper than like $400 when yesterday you could get one for $2, $3, $4 a contract. So likely, they're saving the FOMO inducing for an options period where they cannot afford to FOMO in like what we saw with yesterday. Because if you imagine if people would have FOMO'd in yesterday at those prices, every idiot with a $2 contract would have thousands of dollars of gains off of nothing. So likely to mitigate the fallout from that and to inflate those option contracts to make it more of an institutional type game and a little bit more expensive of a game for, your average Joe just going and throw like 5-10 grand on these expensive ass options. But still, regardless, I think we're going to have a very nice day tomorrow. And I wanted to show you why. We're going to take a look at the Fidelity calculator too. But take a look at the options chain. Just sometimes put all the jargon aside. Just use your head and your human pattern recognition skills, and you'll be surprised at how far it can take you. So look at this shit. This is GameStop here, AMC here, options chain. This is the shaded areas out of or in the money. The non-shaded is out of the money. So GameStop, we closed literally right under 200. AMC, we closed, what was it? 43.96, right under what? 44. We both happened to close underneath a dollar amount. Now look at the dollar amount we closed underneath. There's just a little bit of contract sitting there. In my opinion, what we're seeing here is a gamma ramp, because I'm going to show you. Right underneath where we closed, sitting underneath some contracts. If we get into the money, these can be exercised. If they're exercised, it will cause upwards pressure on the price movement. What's that going to do? It's going to drive the price higher. Then you look at the options chain. Look, there's contracts. This is open interest, not volume. This is open interest. Volume is changing of hands. So ignore this column here. Just pay attention to the open interest column. So 11,000, 4,000 goes down, 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 down. Boom, skyrockets to 24. Down, 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 down. Boom, skyrockets to 9. Down, 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 skyrockets to 11. What's going on here? Well, I think that's a gamma ramp, because as this gamma gets closer and closer to the strike price, and if it's moving faster and faster towards it, it's just going to be this like crazy buildup of momentum. And then this is a continuous pattern until you get to the last strike price before they added on the new ones. So likely, in my opinion, what we're going to see tomorrow is a strong move upwards. Look at the IV. That's ridiculous. Strong move up. And then this area here, I imagine, will be the free game area, so to speak, where retail will basically FOMO buy, buy, sell, buy. So this is where all the churning goes on from the outsiders, basically. And then we see somewhat of a drop back to this area here. And then that may be it until the next run. You know what I mean? So that's the way I see it playing out based on what we've seen. Now, if you look at GameStop, it's the same pattern. We closed right underneath some expirations or some in the money, or right underneath the next tier of contracts here at 200. And then look, they're littered out here, but the big volume ones are between 200 to 50, which happens to line up with AMC's 40 to 50. Then you see 250 to 300, which happens to line up with AMC's 40 to 50. And then there's one thrown in between at 45. Is there one thrown in between here at 275? It is the highest one of that group, so theoretically similar. Then you look from 275 to 300 or 300 to 330. So you skip 3. You look from 50 to 80. Skip 3, as in 10 sets of 10. It's the same shit. It's the same shit. And then it stops. Then it stops. So I imagine what's going to happen is that, again, this is all controlled up until this point. And then at this point here, at 340, it's free game. Retail hashes it out. And, we could see maybe upwards of 450, maybe higher. But then, an inevitable come down to around here. That's just a theory. We'll see what happens. Now let's do the calculator. You bastard calculator. You jacked my tits for no reason. What's going to happen tomorrow, Fidelity? What are you thinking? Dun, 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 dun. Okay, not bad. Modest, about the same. 53.55% chance above, 46.45% chance below. I'm curious to see AMC, because it was thinking AMC was going to go up yesterday for some reason quite a bit. Oh, what the fudge? That's different. I'm going to have to disagree based on what I just saw in your options chain, Fidelity. So again, this is just reference and a tool to use. Maybe this is a sign. If we've broken the calculator, if it's all of a sudden wrong, maybe that means MOAS is going to happen. Hold on. Yeah, actually, you know what? You can't always be jack worthy, right? But hey, the first part should have been jack worthy. Because that ramp, I feel like it is apparent in the data. So let me know your thoughts on this. And again, I am retarded.